So everyone, thank you so much for checking out our live panel. This is Sean, and our next panel will be moderated by Oliver Gale, who's founder and CEO of Elemental and founder of Bitt. The title of this panel is Legacy Banking and the Transition to Digitization, Legacy Systems' Biggest Problems, and Next-Gen Process Automation. Enjoy this panel.
Thank you very much, Sean. Guys, pleasure to have you all here. We're all in the financial technology space. We've all had experience with dealing with traditional banking systems and some of the challenges that can arise there. I'd like to maybe start with an opening question, and one of you can volunteer to take it. And so the first question I have as it relates to the subject matter is, what problems do you see coming up frequently when working with legacy banks and platforms? Are they technical? Are they cultural? Are they operational or regulatory or something else entirely? Often there's a big distinguishment made between the fintech operation and the legacy institution operation. And it's critical that both of these entities find their place working in the ever-changing world of fast-moving information and payments. So I would love to get, one of you maybe volunteer, and we'll try and keep the conversation flowing.
I'm happy to kick it off, if that works. My name is Stuart Smith. Just to give a quick background, I've worked in the consulting field in financial services for a while now. So I'm mostly working with large financial institutions and trying to figure out how to adapt to the changing landscape, especially the large market share that fintechs have taken on over the past few years. What I continue to see is regulatory issues being huge for legacy technology due to organizations' large amounts of technical debt, right? So inflexible code bases, legacy delivery practices that are tough to integrate, new regulation that comes down the chain, requiring them to spend both a lot of dev time to adapt, but it also prevents them from being able to take advantage of new regulation, right? So recent regulations have come out from, or clarification that's come out from OCC, allowing a lot of positive movement in the crypto space for traditional banks. It's going to be hard for large institutions to react quickly to that due to their technical debt, whereas fintechs are just much better positioned to take that on.
So let me chime in on this as well. Being the legacy guy here that's been with large international financial institutions for over 35 years, I see the biggest challenge that we have is just the legacy itself. When you're dealing with an institution that's been around more than 5 or 10 years, you're dealing with petabytes worth of data that has to be stored, has to be maintained, and if you're in certain regimes like the US or Europe, can never be deleted. And so they're overwhelmed with the amount of data that they have, or what we call big data, and they're overwhelmed with the amount of legacy applications and new applications that are required to be able to support it. The only successful transitions I've ever seen have been when we've started de novo, where we've put everything aside, we've encapsulated or ring-fenced it, and started something afresh. Whether it's a digital bank, whether it's a new type of product offering. When you start with nothing, it's a lot easier to build and to create and disseminate than it is when you're trying to integrate with decades of technology and decades of data. And I don't know how you get around that other than trying to find ways to encapsulate it and still provide the necessary regulatory scrutiny that is there. But I see that as probably the biggest challenge to technology being able to advance the cause of legacy institutions. It's almost a hinderment in many cases.
Yeah, I completely agree with, what's been said so far, both on the technological side and the regulation. So my name is Pierre Quemard. I work for Finastra, who is the third largest fintech in the world. And we serve like financial services across all the world, like capital market, loan, retail, whatever you think about. And we are confronted to this problem all the time. And the question is, how can you innovate and bring really the banking of tomorrow without this kind of rip and replace what we're talking about? It's just like building from scratch. And really, I think open platform is really a good approach to it. We talked about tech and regulation. We haven't touched culture yet, which was part of the question you raised, Oliver. And I think it's extremely important because there is a huge cultural difference if you think about a fintech or a traditional legacy banking world. And the culture is both in silo. There is less collaboration across world. There is, I'm doing back office, that's what I'm doing. I'm in the front, I'm doing this part, and they have trouble communicating and being able to engage with each other. I would say it's almost an historical problem because it was a safeguard for them to work this way before. We wanted them to be slow and validate every step of the process. But in the new world, including the new regulations that are coming, we're getting closer and closer to continuous delivery, continuous improvement. And the question is, how can we embrace this with this new, I would say, digital banking that is required? How can we move this legacy towards this? And we need a frictionless path toward it.
Thank you very much, guys. I was going to say that, it was interesting, Stuart, you mentioned that regulation is coming and legacy banking has to advance. And you actually find that fintechs are on the opposite side of the spectrum where they have advanced, but the regulation is lagging behind. And, there's this uncomfortable trade-off that both parties end up having to make to achieve advancement. And if I may, guys, I wanted to, Brent, you mentioned a really interesting point, which is that the only successful migrations you've seen are the ones which start with a tabula rasa, with a fresh implementation and deployment. And the immediate question that came to my mind is, well, what is the value of these petabytes worth of data? How does that harness? And that leads me to a second question, which is, when you talk about financial technology, concepts of blockchain and AI are often touted decentralized finance. And, I want to hear from you guys as it relates to your experience. Where do these technologies fit in the spectrum of they're really delivering value or they hold future promise? And does it assist in solving some of these legacy data?
So let me start out. I think there's two aspects that you want to look at. The first is the whole data management aspect of things and data itself. And then the second is the channels by which things are moved and by which things are utilized. When you look at the legacy data, it's a double-edged sword. On one hand, having more data means that you can do more data analytics, and it means that you can potentially make better decisions about your offerings and the products and provide better details about why people are doing things or what people need. The other side of the sword is that you're also then subject to much more regulation. The privacy laws, of which in this country, California probably leads in the privacy laws, but California is still a couple steps behind Europe and even parts of Latin America. The privacy laws mean that data isn't yours, that data actually belongs to somebody and it's their data and you have to ensure the privacy. Now, you can go down an entire new conference on what that means, but what it does is adds a new layer of complexity to being able to utilize that data, how you store that data, how you move that data, and what that data can be used for. So that's a whole nother conference that you can have on the advantages of having big data and the privacy around it. Then we get to the pipes discussion. Things like blockchain are wonderful. Blockchain, digital identification are wonderful for being able to create a peerless point-to-point type of movement of information and transactions. That in and of itself creates a dilemma because you've got governments on one side that want to be able to know everything about every aspect of an individual and the transactions that they do. And whether it's a government like China, which is going to assign social or is assigning social scores to everybody, and those social scores are going to determine whether or not they can move money, how much money they can have, where the money can be located, where they can live, where they can travel, et cetera, et cetera. Or you get into the US, which is much more libertarian in its approach of, you know, my house is my castle, my data is mine, and I'm going to do what I want to do because of freedom and liberty. So you got the two polar extremes, and the pipes that are being created are being subject to the whims of governments determining how those pipes can be used and whether or not they can have access to those pipes. So it's wonderful to build a technology that says it's completely encrypted, it's point to point, nobody can access it, nobody knows what's going on. But we've seen countless examples of technology that was built like that has met a very short demise due to government regulations. And I think you can look at just the current WhatsApp example. I'm kind of laughing about the fact people are concerned about WhatsApp sharing their data or having access to their data because they've had it for years. And it started years ago when the government started demanding that WhatsApp provide the data for investigations for money laundering, terrorism, et cetera, and bad social scoring. So I think we're delusional if we think we're going to find a way to get around all of this interference of movement of data and interference in how our technology is developed. I think it's a question of how do we cohabitate with it. That's my 2 cents.
I like that answer. No, thank you. I like that answer. I think raising the regulatory pressures, political pressures, and how they relate to that data is very, very pertinent and on cue. Sure, Pierre, what are your thoughts on this? Do you have anything to add or
I have a lot of
disagree with
thoughts. If you want to go, Stuart, feel free to go ahead first.
Okay, sure. Yeah, I'd like to jump in. Thank you. Yeah, I mean, as far as using blockchain in process automation, I think we've seen that, you know, organizations really are all over the place when it comes even to their knowledge of their processes. I mean, all these tools, both blockchain, AI, RPA, all those things are steps in the maturity chain, right? A lot of organizations have multiple branches, multiple subsidiaries that are all doing processes differently. So even just getting them on a standard version of the process is a challenge, right, for a lot of traditional legacy shops. So just forming knowledge around the process is really step one, right? At that point, you know, you could start to look at more advanced technologies like process mining to get cycle times, things like that, and then start instituting RPA and intelligent process design on top of those things. But we really feel that, you know, exploring the current state and really wrapping your arms around how things are being done is important. But with that said, we have explored blockchain quite a bit as automating internal processes, right? We all know with blockchain that a big issue with it is adoption, right? Getting everyone to use the same blockchain platform is a challenge, right? With a competitive landscape, right? But one way to get around that is to automate an internal process, right? So one business area moving data to another, or, you know, internal payment processes, things like that should be looked at as a good kind of first step to explore these techs, because it does get around that adoption problem.
Yeah, I completely agree with you, Stuart. I'd add a little bit more to it. I'd say having an immutable chain is a super useful tool to have, no matter what. And it doesn't necessarily have to go with having a dark immutable chain that you can read. So blockchain by itself is a very polarizing thing, right? Because you can say, oh, it's decentralized, it's going to not help me at all for regulation purposes. But the reality is, it's a tool, and you can use it in a very smart way. Like, think about smart contract, just that. Smart contracts is extremely useful for any kind of loan application and all of that. It doesn't mean that I want to keep this completely decentralized. It doesn't mean that I want to keep it completely dark, but I can use it as a tool. And it goes back to how do we have digital and legacy? The reality is we can't remove legacy to go to digital. We need to have them cohabiting at the same time. And you will need this giant data that have been stored for 20 years, because what happened 15 years ago might be important for regulatory purposes. But having an immutable chain of contract can be a super useful tool for you to speed up and, as you were saying, Stuart, automate your loan process. So being able to go straight through processing using the new technology is not necessarily going against the requirement of legacy. And that's when we see this fintech boom being able to work with existing banks by finding a way to communicate without, once again, having to be tightly integrated, but using a frictionless environment. And we can learn from all the big players that have done it already. All the Google, Facebook of the world, they have built full API layer to be able to work together without having to impact one another. I don't care what you're running behind. If it could be a data lake or a database that you've been using for 30 years, the reality is I can still bring innovation on top of it. And that's the idea of using a platform decentralized.
So Pierre, I two of your observations I absolutely love. One of them is I think people need to recognize that things like blockchain, and you could even say cryptocurrency for that matter, are tools. And we need to depoliticize them. They need to quit being the bad guy in the room, and they just need to be looked at no different than when we went from COBOL to Fortran to C to C++ to Java, et cetera, and on to what we're doing with now. It's a tool. So I think if we can do that, then it takes a lot of the emotion out of the discussion. I think the second good point you made, though, is that we need to cohabitate with these legacy systems. And I've spent too many years listening to people come in, vendors come in, different groups, meet with me saying, we're going to replace this legacy system with the latest and the greatest. And I was a programmer back in the days when we were doing COBOL and Fortran. So, I know how difficult it is to replace. And I think we need to remove that lexicon from people's, particularly consultants' language. We don't replace it. We need to figure out how to cohabitate with it. And we need to not necessarily layer it, which is another thing I'd love to see removed from every consultant's diagram as well as vocabulary. We don't want to layer it. We want to cohabitate with it. And we want to figure out, to your point, what do we really need from those legacy systems? Do I need 100 petabytes of data that goes back 45 years? Or do I really just need a very small API that allows me to access a very specific piece of transactional or customer information type data? So I think the goal is cohabitation, not replacement. Depoliticize the tool set and treat them for what they are, which is tools.
Brent's giving me a lot of great suggestions on how to do my job, which I'm very thankful for. That actually go off.
Yeah. Well, Brent, I can also say, I got into the blockchain space in 2013. We set up the first Caribbean exchange, and it really was an evangelical task at the time, because it was this annihilation event, which was received and conveyed on both sides. You have legacy financial systems and then blockchain systems. And the narrative was the old systems will be eaten by the new systems. And it did very little to help actually advance this cohabitation agenda. And you guys are absolutely correct. These are tools. And when one side toolkit is filled with hammers, everything looks like a nail. And the reality is you have to be mindful of your architecture. So, for me, it's a breath of fresh air to hear, this thought of, look, technology, leverage it, apply it. And on the subject of cohabitation, I want to use a different word, which is composability. The idea that we can have clusters of financial technology services that provide different tools, whether it's the compliance tools, the credit tools, the payment tools, the processing tools, and so forth, the underwriting tools, and have these independent financial software companies or service providers actually seamlessly interlink and integrate with each other, build on top of each other like Lego blocks. And, this is something I've observed keenly looking at decentralized finance in the last 18 months in particular. there's just been this explosion of innovation because one person builds a tool for identity and it's plugged into someone else's credit module. And the role that legacy banking plays in that architecture, is it a hub and spoke model where the legacy bank sits at the middle, or is it more distributed and the different players communicate with each other? I mean, how do you see it in practice, and how do you think it should be? Because those two things might be different.
I mean, I'm happy to take a crack at that. I mean, I think if you think about conceptually what the most efficient banking system would be, it would be one that's mutually exclusive but collectively exhaustive, right? Every feature is unique. Every feature has a purpose, and it's not repeated, right? We don't see that at all currently, right? There's lots of platforms installed that have repetitive feature lists, duplicative authentication. Even getting to something like single sign-on is a big step there with legacy organizations. In order to take advantage of something like that, a traditional organization, is probably not going to be able to integrate all of those services themselves, but they can get themselves in a state to integrate through APIs, right? So building APIs that work with their traditional banking systems, get them ready to take advantage of fintechs, allows them to reap a lot of the benefit that fintechs are bringing, that Decentralized is bringing, but still retain their core functions.
I think once again, we should learn from what the other digital players have been doing, right? When you say, hey, there is a lot of core systems that provide the same functionality multiple times, how can I scale through this? Look at Netflix. Netflix is a perfect example of how to scale massively, where in the end, what they had was a giant library of movie, okay? And they wanted to be able to give it away. They broke it down into smaller pieces. This is going to take care of the jacket. This is going to take care of your recommendation. This is going to take care of, and they broke it down into small microservices that are talking to each other. And this is something that can be done. Again, to go back to the point where, how am I moving from my legacy system? Don't move. Break it down into smaller pieces and leverage greatest technology available to do that. Thinking about SSO, I have 17 different SSO. OAuth 2.0 is a standard that everyone is using. This is a standard for everything. If you cannot do OAuth 2.0, then don't do SSO, right? But the reality is everything can migrate to this because you can have just an authentication server that just take care of this. So microservice pieces, and as you said, I love the composability because it's a modularity concept. Being able to just create small modules that can interact with each other. Yes, some workflows are much more complex. Yes, in the banking world, sometimes you have to do workflow by workflow, one step after the other, and they can be modularized. I agree with that. Modularize as much as you can. That's going to drive your innovation stack for you.
I would throw in an additional question, not to confuse it, and that is, what is the role of legacy banks? Because quite frankly, I think some of the products that are offered and some of the services that are offered, we shouldn't be spending a dime on technology for them. We should be compartmentalizing, ring fencing them, and letting them die their natural death. So I think it's, the first question that needs to be asked is, why are we even doing anything about these particular products and services? And how do we go off and build what is the future, utilizing what small, meaningful components of legacy may be out there to interact with?
Like checks. Checks is a great example.
I can give you a great example on checks. I did some analysis on our bank just 2 years ago. In the branches in the United States, what transactions come through the branches and why do we need the branches? It was over 95% of the transactions involved checks. I mean, we're like the last country on the planet that still has checks and still has people that would prefer to use checks over a digital transaction or even a credit card.
That's a generation
credit card. Yeah, well, no, it's not just a generation. It's a generation and a socioeconomic issue.
I think it's what it's the historical problem I was telling you about, right? Historically, check have been useful. Now, if you look about, even the Fed is trying to push like getting away from check. So the Fed themselves are like, we cannot do check anymore. The thing is, you will still have business that are using check, but it's going away. So if you compartmentalize it into a small thing, eventually you can move away towards something.
Well, you have to.
Is a great example.
Yeah, not to go down a very forbidden political path, but you have to determine what customers you really want to do business with, because there's a very large giga economy that exists in the United States that relies upon being paid by check and using check cashing services, because essentially it's a cash-based giga economy. And they don't have bank accounts. They don't want bank accounts. They don't want to go through the identity. They don't want to deal with the tax associated with it, et cetera, et cetera. Right, wrong, or indifferent, it's a fact.
Fascinating.
You know, I want to ask a question, like, to get maybe a little bit more into the heart of what is the role of a legacy bank? What is the role of a large commercial bank with archaic systems, large balance sheets, large customer bases, and strong reputations and brands in the space? Is there anything for these institutions to feel concerned about, or are they critical infrastructure and they can essentially embrace innovation, embrace fintech, and complementary players in the ecosystem? Brent, you suggested that some of these components need to die their natural death. You know, is it a fully complementary relationship and with legacy and fintech, or is it absolutely adversarial, or are there strategies? And if there are strategies, I'd like to know, if you were to advise a legacy institution on what their strategy should be, you know, at its most, not down the middle of the path, if you will, what would the most disruptive and innovative model be? If a legacy bank were to say, look, Web 3.0 is here, and we're going to grab the bull by the horns, and we're going to take this 180 degrees from archaic to lead in the field, who's going to do that, and what are they going to do to achieve those results?
I mean, I see no reason why banks can't change, right? I mean, there's a lot of great innovation going on. There's a lot of legacy systems, but, you know, doing the proper assessment and, you know, modernizing like that, there's no reason you can't take advantage of new lines of business. I think something that would be huge, and, you know, there's regulation that's paving the way for this, is for a big bank to provide custody of crypto, right? That's something that's been clarified and is in the works. And take that even one step further, right? If you can provide custody of Ethereum 2.0, can you offer a staking solution as a traditional bank, and then provide a service that is providing, you know, an interest rate up to 10%? I mean, that's a huge draw compared to like a traditional CD. Obviously, there's lots of volatility that goes with that, and users are going to have to be aware of that and educated. But, you know, I mean, that's a traditional banking service, right? Custody, that allows them to take advantage of an innovation from decentralized finance. I think that's a really nice marriage.
I agree on that.
I wasn't even thinking about, I wasn't actually explicitly thinking of crypto, but I think taking the custodial, embracing the custody game, and going after those high yields is definitely of value. You know, I want to throw something that I think this was announced last week, but the OCC announced that banks can clear and settle with one another using stablecoins. Now, you know, for the viewers that don't know, stablecoins are fiat currency, which has been tokenized onto a public blockchain. And what that means in all of the practical implementations today is that you can send a digital US dollar to any wallet, regardless of where it's located. And so US regulators are now saying that for national payments between financial institutions in the US, you can clear and settle with these stable coins. However, that doesn't preclude you from doing a cross-border remittance from the Philippines over to the US with exactly the same transaction type of cost. I mean, is that a game changer, or is it a novelty?
It's not a
what's going to happen over the next.
Not a big step for the regulators. All they did is change the name and the technology that's utilized. We've had things called euro currency, offshore currency for decades. Which is basically U.S. dollars that are spent outside the United States or reside outside the United States, whether physical fiat or whether numbers on a computer. It's existed for decades. All they've done is change the technology that's being utilized to identify it and to move it. Not a big step, for not a big regulatory step.
But it's a big step in a sense. Will, again, allow you to have baked-in verification inside. And so if you have regulatory checks that need to happen, they can happen on the chain, whereas before they had to happen outside.
Correct.
So once again, I agree, we do exactly the same thing, but the tool enable more modification on the fly.
Yeah, the tool's different. Yeah, the tool's different. I think the
legal system.
Yeah, go on. Sorry.
Go ahead, Brent.
No, I was going to say it would be a huge change if they allowed the movement and settlement to be fully transparent and non-documentable. That would be a big change.
Yes. Well, there's an interesting challenge. I mean, and so I wouldn't expect the regulator to change their stance and their approach in terms of the principles that they're defending, because the principles they're defending are financial stability and economic stability. So I completely take your point in the sense that they're recognizing that there's a new instrument that does the old job better in some circumstances. On the other side of the coin, there is this permissionless or decentralized nature of many of these instruments. And so, really, when I think of what cryptocurrencies or stablecoins are doing, they're re-entrenching the concept of a bearer instrument in the hands of society. And prior to the emergence of Bitcoin, and the trust hasn't changed much, the drive has been to eliminate cash. Because it's expensive, it's anonymous, and generally speaking, it's a cumbersome instrument. But also, it's as you mentioned earlier, Brent, it's something where people would love to get paid in cash and do get paid in cash because they don't want to pay their taxes. So there's a whole new Pandora's box which is open when you have these financial instruments that can reside in the wallet of an individual and cannot be seized, and can also interact with decentralized protocols, which no one has the power to stop from functioning. And so, I have my views on where we go from a regulatory and societal perspective, and I think it's a good outcome ultimately. But is there going to be a battle ahead? And does that reach a crescendo? And what does that look like? I mean, are we going to find all cryptos banned outright, and the only thing allowed is central bank digital currency? If that's the strategy, will it work? There's a lot we can talk about.
Oliver, if cryptocurrencies only replaces cash, we've lost a huge opportunity. In fact, to me, that's probably the least important thing that cryptocurrency could do. And that's what's caused the politicization of cryptocurrency, and such a negative view towards it from regulators and from traditionalists. I think the goal here is to basically replace all the pipes and the plumbing that exist in the financial services industry around the world, and to create a seamless, peerless type of transactional network, if you want to call it that. And that's probably an old style word, but it's essentially what it is create a completely seamless network with full transparency to anywhere, anyhow, and in many cases eliminate the whole concept of fiat and foreign exchange. Now, you'll have people fighting you all the way on this because there's huge amounts of money at stake, profit at stake. But I would think that that's, blockchain and crypto, that's the end state, not replacing cash. Replacing cash just becomes a byproduct.
Yeah, replacing fiat.
Yeah, replacing fiat
is the mission.
I think what Brent's bringing.
Yeah, well, certainly that's going to be a pitched battle. That one is for sure. Yeah, sure, Pierre. What do you guys think?
I think what Brent's bringing up is really interesting. I think a lot of the movement in the fintech space over the past 10 years has been focused on the retail customer, payment apps, things like that. But over the past couple of years, we have seen inroads into those core banking rails, right? That back office stuff. I've been reading about payment netting between organizations. That's really interesting. There's some ledger technology out there that does that. As well as foreign currency exchanges. I think there's, that's where the real benefit of this is, right? When there's, potentially trillions of transactions that occur in the foreign currency exchange world every year, right? When you think about, a ledger that has that kind of throughput to manage something like that, that's really huge. And also a really good branding for fintech, right? That you're getting away from potentially just an app on a consumer's phone into actually providing, a core banking function like that. So, the regulatory aspect is huge as well. The stablecoin regulation is kind of hard to interpret, I think, because one way that you could read that is that it's kind of laying the path to allow central bank digital currency down the road, to allow CBDC to be transferred from the Fed to a bank. I think, they needed to clarify something like that already. So it's kind of hard to interpret, especially when different agencies are, kind of giving mixed messages around this. But, it's an exciting time to say the least.
Yeah, just to put the final hammer shot on the cash stuff. There is no cost of entry for cash, and there is a cost of entry for digital wallet. So when you say, hey, everyone can pay in digital coin versus cash, the reality is a lot of people just have a flip phone. So there is an issue of equality in it. I love the decentralization because in a way it gives more power to the people, right? But you're also taking away power of the people if you do that with cash. Now, there is a problem we haven't talked about, which I think is every time there is a talk about a cryptocurrency or blockchain, we never mention it, and I think it's super important. It's the fact that the technology diverge, right? That's a technology that really diverge. So the more you decentralize, the more expensive it will be. Now, the good thing when Brent was talking about pipes, the way it works now, if you think about an ACH or any kind of payment, you send it, and then they check, and it's okay. And every time we do it, it's crazy. Every time we shoot something, every time we do a payment, shoot something, I'm like, okay, no, it's good. Every time. With crypto, it's settled by default. There is no settlement. There is nothing that needs to be done. It's on the chain, it's validated. Everybody's like, oh yeah, we're good. That's it. So this is a huge change. And that's a revolution in terms of exchanging money, because you don't exchange money and then shake hands and then go and talk together and have, oh yeah, we exchange money. No, you exchange money. That's it. For real-time payment, it's a game changer. But the more you decentralize, the more expensive it is. And if it's fully decentralized, there won't be enough computer power on Earth to be able to make it work on the long run. So that's why distributed ledger is beautiful, because it's decentralized to a certain level, but not too much, not to the point where we can handle it anymore.
And as the theme, one of the themes in this conversation has been utilize the toolkits. And I completely agree with you that decentralization is in some senses, adversarial systems. And the more you decentralize and rely on consensus, the more expensive it becomes. And so you want to find that balance between efficiency and cooperation and validation and having an auditability function as well. So I like that comment. There's another, let's pivot a little bit back to the legacy systems. We're going back to legacy institutions and their path to digitization. One of the big concerns that these large institutions with a lot to lose really have on their hand, whether it's, data protection or reputation or balance sheet, actual capital, risk management. And so you're approaching one of these financial institutions. What are, is there a standardized playbook where you say, here's steps 1 through 4? What are the big risk management tools that make it more palatable for a legacy financial institution to take a risk on a fintech, and B, what is non-negotiable and insisted on by these entities?
I'll throw my hat in here, and I would actually say one nice thing about working with legacy organizations is that they usually have pretty nice guardrails set up for development, right? Architecture review boards are something that are usually pretty well in hand at large institutions. So, chances are good that if a new technology is being instituted, that it's been double checked every which way. That also slows down dev time and cycle time, but it is one way that they are, more risk adverse, right? Definitely more risk adverse in general. So I think that's a nice function of a legacy organization, strong enterprise architecture, and guardrails in place.
Adding to this, and sorry, Brent, unless you want to go.
No, please.
But adding to this, I think it's also a matter of expectation, right? So as you said, it's good sometimes that things are slower. It's good that there is large foundation of stuff that are not moving. Instability. If everything worked like a fintech that can crash in a day after, then you cannot really work on it. Sometimes you go on a website, and it happened on this website earlier. They say, just refresh the screen. It cost me nothing to refresh the screen. I'm going to refresh the screen and click again. If it's about money and the money just disappears and I don't know where it is, that's terrifying. And so you need something much more stable when you talk about banking and money, and especially for big institutions that manage a lot of amount of money. We talked about retail and corporate world. They talked about it on the chat, but I think it's also important to know who you're targeting, which persona you're working against, because the expectations are completely different. And sometimes a fintech doesn't work, and sometimes I'd rather money not to move. An example of this is Venmo. Every time I go to a restaurant now, I Venmo my friend. 2 years ago, we weren't Venmoing people, right? Where is this money? Where does it go? It's because the money is not moving. And as soon as you know the money is not moving, there is less risk because there is no money actually. Actual money doesn't move. There is no ACH, no transfer, nothing. It just moves when you decide to take it away. It's a virtual account. And that's a way to solve it, because as a consumer, I'm okay with a virtual account and money not moving for real. As a big shipping company that's sending $1 million, product somewhere, I need to make sure the money moved. Otherwise, I'm in trouble.
Yeah, I would.
So that's essentially.
I would agree with
execution in silos.
Sorry, go on.
Go ahead, Brent. No, I was just saying it's execution in private environments, and then settlement on the legacy rails, and that reduced risk. Brent, please go ahead.
I was just going to agree with them. I think that if we treat fintechs as tool sets, and they're tools used within the legacy controls, they're perfect. It works very well. It's not a conflict, and as described before, the governance processes that are in typical legacy organizations prevent disasters from happening. Now, it may not move quite as rapidly as you would like, but it tends to move more rapidly than your traditional software shops within the legacy organizations. I think the risk and the problem is when you start treating fintechs as standalone businesses. They have a different set of rules and set of governance that they go by, and a different set of expectations. And Pierre's comment was brilliant. I mean, if you're dealing with one of the many fintechs that are out there, which tend to be interpreted as apps on your mobile phone, when the screen blanks out, you just sort of like, it's like, hey, it is what it is, and you reload the app and you hope that it works again. if you're moving money with a financial institution and the screen blanks, you panic. And if you're a corporate treasurer that's moving hundreds of millions of dollars, you immediately call your lawyers, as we've experienced multiple times. So I think it's just it's what your expectations are and how you're treating the fintech organizations. There's a place and a time for everything.
But I highlighted something here. A little problem that we haven't talked about is the fact that the user wants the thing. So if you're a bank and you're like, I'm just going to do like very safe, you're dead because you need to work with the fintech. So we need this communication to work. You need to be able to go faster. And I think that's where everyone is so desperate about. They're like, I know I want everything to be so because that's the way it works. But also all my users are telling me I need the latest sexy app on my phone. So once again, how can you de-intermediate? And the idea behind it is API. If you can use APIs that are like decoupled, that's the solution. I'm not saying that's going to solve all your problem, but it solved everything for the digital world before. We just have to apply it to the world of finance. And it's a terrifying things to do, but that's the only way to get both worlds, best of both worlds, legacy and digital, not legacy versus digital, legacy and digital.
Correct. Agreed.
Mm-hmm.
And you're giving us a good example of technology here, Pierre, with your camera dying.
Yeah, we can't see your car anymore. There you go.
Yeah.
In terms of, so we need to have the innovation. There's billions of dollars at risk if systems fail on the inside of legacy payment systems. Our phased approach is where you sort of take the project and say, we'll test it on 100 users, we'll test it on 10,000 users, and then we'll roll it out to the entire user base. Is that a standard operating procedure? Do you find that assists in getting the legacy institution comfortable with the operations of the project? And does that allow for massive systems overhaul in an incremental approach?
Oliver, let me just complement that. And this goes back to Pierre's comments on culture. There's organizational culture and then there's national culture. And so I think it's difficult to have one single answer for all those questions because it really depends upon the national and the organizational culture. Whether you're developing something in the United States, Japan, or Brazil, the expectations are completely different.
So how I've seen this done successfully.
I mean, I could tell you
how I've seen this done successfully. To come back to Brent's prior comment around the politicization of blockchain, right? If you mention blockchain to a lot of business users, they shut down, right? You have to prove to them first the benefit, right? Rather than trying to squeeze the tech in to a process, you have to evaluate the process, make sure that the tech is a good fit, right? So if you're trying to, and we've even taken the approach of not using the word blockchain, right? Because if someone you're working with got burned on Bitcoin trading, they're not going to want to hear the word blockchain at all, right? So branding is a big deal, but also the proof of concept stage is huge, right? When working with these large organizations, there's usually pretty amenable to proofs of concept and pilots, using a couple customers as a testing ground. We've had good success doing that.
I'd go even past towards running design thinking session with them directly. Like really, instead of saying use this technology, let's see what is your problem, and then let's use technology as a tool. Which goes back again to what we said at the beginning. But I think prototyping, design thinking, by design thinking I mean a user-centric design approach. That's also extremely powerful when you're going toward the persona that you're working to, because as Brent said, it's completely different according to which persona you're working.
And I agree. I mean, it goes back to our original comments that it's treating technology as a tool and making sure it's the right tool for the culture and the environment that you're operating within, and never making the assumption that you have the only tool that's going to work. I think you have to be able to sell yourself and your concept as much as you have to be able to sell the tool within the construct of the organization that you're working with.
And the tool has to demonstrate value, right? I mean, it has to be measured. You have to have your KPIs and metrics being hit. And if it's not delivering that, it shouldn't make it past the POC stage.
Mm-hmm.
Right. So you're breaking your project down into phases, and you're saying that we're going to do a feasibility assessment first. Then we're going to do a prototype rollout for this institution. We're going to prove that there's value in the chain. Once we've proven there's value, then we're going to start to incrementally open the valve to allow that transaction flow take place. I saw an interesting comment saying we have to separate the discussion from retail to institutional or enterprise transactions. Pierre, you've made that, you keep reiterating that the customer is driving the experience. And of course, financial institutions themselves can be the customer, depends on who's doing the selling. When it comes to bank-to-bank infrastructure overhaul, maybe payment rails or clearing systems or whatever the infrastructure that's being brought to the table is, does that change the scope of the conversation? Does it change the scope of the project or how it's approached? Or is it much the same model?
I think the models have to be completely different. Now, maybe the tool set's the same, but the approach has to be completely different. I mean, when you're dealing bank to bank or institution to institution, it could be the Treasury Department of a major, Fortune 500 company dealing with a bank. Payment rails are a totally different type of conversation than doing a remittance payment for a consumer. It may look the same from a technological standpoint, but from an expectation and a governance standpoint, they're as different as night and day.
I think an example in the market is Paxos, who's been looking to disrupt settlement using DTCC. They have, I believe, 3 current users in their pilot. But the sheer steps that they had to take to get there, with SEC regulation and SEC rulings on each step of the way, I think just lends credence to how much more attention there is on those core rails, and why we're seeing it lag behind versus retail.
It's unfortunate. I mean, it shouldn't, but it's fascinating to me that consumers are so manipulable and easily placated.
But Stuart, you said something super important. You said there is a lag behind. And I think it's really important to see that it doesn't mean that they don't want the same thing. It means that eventually they will converge. And so to go back to what Oliver said, so do you think bank to bank is completely different? Yes, it is right now. But eventually it's converging. And you see it as well with what millennials are, it's going to sound weird what I'm going to say, but what millennials are asking for, it slowly trickles back up to older people will want the same thing. And it's really interesting because we've seen it trickle both ways. But the idea is that there is always a fringe user, an early adopter of the technology, and eventually it will become mainstream. Banks are seeing the same thing, but they have different constraints. We talked about legacy, but it can be assuaged by being able to decouple it, because eventually the end user, which is all what banking are, right? Banking is all about helping people to bank. A bank itself is not required, banking is. And so the bank itself is just providing banking, and user want banking different. So it will need to happen eventually. The question is when.
Agreed.
And, most of the conversation we've centered on the US market, and it's been pointed out that there's a big difference between the advancement of payment systems in different jurisdictions. The US is lags behind Europe. You've got Africa, which has leapfrogged a lot of legacy infrastructure. And then you've got regions like Latin America and the Caribbean, which are laggards in the innovation cycle. Who's responsible for let's say who's responsible? Is it the regulators' fault that one region is behind another? Does it come down to politics? Is it the private sector that should be driving the change?
I like to stab this
Is
one.
it a lack of investment?
I like to stab this one right now because honestly,
Sure.
look at open banking and PSD2 in Europe. They had a regulation that changed it. Now everyone has API there. Why no one has API yet in the US? Mostly because in Europe, they say, you know what? This is the way it's going to happen now. Everyone need API. Everyone need access to data. And it changed a lot. So I think regulators have a super important role to do in this. Sorry, keep going. I just had to punch this.
No, I agree with you, Pierre. Good regulation creates good technology and good advancement. You can't do it without good regulation.
Mm-hmm. And so would you say then that the structure of the U.S. in terms of its federal and state structure creates some of the friction? And is that why the U.S. is a laggard as it relates to financial technology compared to places like Europe? And is that going to change? I mean, is this going to change, or is this just a reality and it's an acceptable one because change does eventually trickle through the global economy?
Culture. People's culture. People's culture determine the regulation.
What I see...
It's so difficult to change culture.
But what I see in banking, if you think about Citibank, for example, or BBVA, they decided to follow open banking standard. They decided themselves to say, you know what, regulation is not pushing me, but I'm going to do it. And that's why they are right now at the leading place in front of their customer. So I think the banks that are inspired by what's happening around usually gain more market share. So being able to, if you don't have an open platform yet, honestly, go do it because you need it. You need it.
And a nice way around this is the consortium model, right? That you can kind of build your own pseudo country, right? Working with other banks to simulate how this works. And if that can demonstrate value, then you've kind of made it through the pilot stage already.
I agree. And you may actually push the regulators in your direction that way.
Very good. If you think about the way politics work in the US, it's often that big donors or people who are very involved already shape the politics afterward. Whereas in Europe, because how Europe works and how big Europe is compared to the countries or the corporation, it's usually driven the other way around. So again, culture.
I think our time's up.
Mm-hmm. Yeah, gentlemen, thank you very much. I mean, it's been a great experience. Thank you. I've really enjoyed the different perspectives, and it's certainly been a learning experience for myself, and hopefully for all of the viewers and listeners. So, thank you very much, and have a great.
Thank you, everybody.
Take care.
Thank you.